All right, let's talk about UWM Holdings, ticker UWMC. They just dropped their Q3 2025 numbers, and honestly, the market's reaction has created a really fascinating puzzle for investors. We're going to dig in and try to solve it. So here's how we're going to break this down. First, we'll look at this tale of two tapes in the results. Then we'll get inside the bull case from management and contrast that with the market's pretty aggressive pushback. Finally, we'll give you our take for the next call, and of course, wrap up with the disclaimer. Okay, so right here, this is the heart of the whole story. On one hand, you've got revenue coming in at over $843 million. That's a nearly 20% beat. I mean, that's huge. But then you look at the other side. Adjusted EPS, just a penny. The street was looking for 7 cents. So you've got this massive top-line beat, but the bottom line just completely fell apart. The big question is, why? And that question leads us right into our first section, this tale of two tapes. We're going to look at the awesome headline numbers versus how the market actually reacted. So let's start with the good news. And wow, was it good. Operationally, this quarter was an absolute monster. They cranked out almost $42 billion in loans. You have to understand, that's their best quarter since the crazy days of 2021. They saw a little dip in rates, and they just pounced on it. A really, really impressive performance. And when you lay it all out like this, you really see that stark contrast. Look at this. Revenue, a beat. Volume, super strong. Gain margin, that's basically their profit on each loan, also really strong at 1.3%. So from a pure business operations standpoint, you'd think, man, they crushed it. But the market just couldn't look past that big miss on adjusted EPS. And that's the key takeaway, right? All that incredible activity, all that volume, it just didn't flow down to the bottom line where investors wanted to see it. So you have to wonder, what does management say about all this? How do they explain this disconnect? Well, that brings us right to their side of the story, the bull case. And you can see from this quote from CEO Mat Ishbia, there were absolutely no apologies on the earnings call. He was completely bullish. His message was basically, look, forget the noise, focus on what we can control, production and execution. This was our best quarter in years, and we did exactly what we said we were going to do. He really framed it as a huge win. And their bigger story, the long-term play, is all about these 3 pillars. They're telling investors, hey, don't get hung up on one quarter's earnings. Look at the foundation we're building. First, it's all about tech, specifically their AI assistant named Mia. Second, they're spending a bunch of money to bring all their loan servicing in-house. Why? For better control and, better data. And third, they're building out strategic partnerships, like this one with BILT Rewards to keep customers sticky and find new ones. And to show that this AI stuff isn't just a bunch of buzzwords, they dropped this number on the call. Over 14,000 loans closed directly because their AI assistant, Mia, was reaching out to past clients. So this isn't some far-off promise. They're pointing to real, tangible business that their tech is generating right now. Okay, so management laid out a pretty compelling story, but the market? Well, the market just wasn't buying it at all. So let's flip the script and look at the market's pushback and figure out why investors hit the sell button so hard. And when I say they hit the sell button, I mean it. The reaction was just brutal. A 12% drop in 2 days, that's not just a little profit-taking. That is a flat-out rejection of the earnings report. And you can see, it just adds to what's been a pretty ugly year for the stock. And check out the volume behind that drop. We're talking nearly 21 million shares traded hands the day after the report. That is a massive spike. What this tells you is that it wasn't just small investors getting spooked. This is what we call a heavy distribution day, and it's a huge red flag that big institutions, the big money, were dumping their shares and heading for the exits. So, why were they running for the doors? Well, it really boils down to these 4 big red flags. First up, and this is a big one, is the volatility in their mortgage servicing rights, their MSRs. Think of it like this. They own the right to collect mortgage payments, and the value of that right goes up and down with interest rates. Well, this quarter, they took a $300 million negative hit on that value, which just completely wiped out their net income. Second, their debt levels are creeping up, which is never something you love to see. Third, and this always raises eyebrows, the CEO sold off a big chunk of stock, nearly 20 million shares, in the prior quarter. And finally, you just can't ignore it. The stock is seriously lagging the rest of the financial sector. All right, so you've heard the bull case from management, and you've seen the pretty harsh bear case from the market. So where does that leave us? Let's put it all together and give you our take for the next quarter. And this really is the million-dollar question, isn't it? You have this company that is an absolute beast when it comes to operations, but the market has some very, very real concerns. So what's the play heading into Q4? As we look ahead, it really feels like this stock is in a tug of war. On the bull side, you've got management guiding for even more high volume and the hope that their AI tech really starts to pay off big. Plus, if rates happen to drop, they could see a huge wave of refinancing. But on the bear side, you've got the risk of their profit margins getting squeezed, the debt is still high, and then there's the big one, those MSRs. Their MSR book is largely unhedged, which means they are completely exposed to swings in interest rates. It's a source of massive potential volatility. So, after weighing all of that, we're landing on a market perform rating with a price target of $5.50. To be honest, the bull case and the bear case are just too evenly matched right now to make a really strong call in either direction. So here's the bottom line. Here's our trade idea. We think this stock is going to be stuck in a range for a while. That really high dividend yield, it acts as a kind of floor. It probably keeps the stock from completely falling apart because investors want that payout. But all those problems we talked about, the MSR volatility, the insider selling, they act as a ceiling. It's just hard to see the stock really taking off until some of those issues are resolved. So, range-bound it is.
And before we go, our standard disclaimer.
This is not financial advice.